Hi guys, how's it going? Judy here, Tribe of Traders. Not in my office today, down the south coast for a sneaky 24 hours away, 24 hours with my lover away, an overnight trip. But Wednesday wake up a little bit later than normal because the Wi-Fi here is not that great. It's a beautiful spot. Oh my gosh, it's just absolutely exquisite. I posted some photographs yesterday, but yesterday we did we were here actually. One of the reasons why I came here was actually to go to a 13th century chapel where they had Christmas carols, an awesome choir singing Christmas carols. It was absolutely incredible. Anyway, the point of what I wanted to speak about today was I have witnessed quite a lot of times, very regularly, people actually do what I call curve fit their trading strategy they curve fit their trading strategy all the time. So what that means is if you've got a trend-based strategy that you're trading and you're trying to force that strategy into a market that's ranging, okay, you're going to get bitten in the butt, okay? And so often, because people are so desperate to trade, to place trades, to be in the market, they feel compelled to be in the market, that they will tend to see what they want to see rather than seeing what really the market is actually showing. So what I want you to do today, what I really want you to do today is create some rules or alerts for you or indicators for you to show you what is a trending market for you. If you've got a trending strategy, what is a trending market for you? What does that look like? Okay, create 2 or 3 pointers, 2 or 3 indicators to you that yes, that is trending. Okay. The other thing is, again, if you've got a ranging market, I want you to identify what is ranging. If you've got a ranging strategy, I want you to identify what is ranging for you. Okay, get a few indicators of what that is. Okay, it's very important. Once you've got those indicators, that's your first call, right? You go to the market, you look at it, you ask yourself, I always say to the guys in the tribe, first thing you do when you go to the chart is ask yourself, is it ranging, is it trending? All right, that's the first thing. But if you're not sure if it's ranging or trending, then create a couple of indicators for you to say that will alert you to the fact that yes it is, or confirm for you, yes it is trending, or yes it is ranging. Okay, but make that absolute, make it consistent. That way you won't be trying to force it. That way you won't wake up one day, go to the chart and say, yeah, that's what it looks like, it's trending, let's put a trend strategy on. But make it absolute. It is or it isn't. And it is according to the indicators that you create for yourself, or it's not. And if it's not, walk away. Okay, the biggest reason why traders do not have consistent green or profitable months is 100% down to mistakes. I've seen it too often. I've been through so many, this year alone, I've been through so many different traders' trading history, looked at the trades they've taken, and time after time after time again, it is mistakes. It's not the inability to actually identify a strategy, identify a setup or a technical setup for their strategy. It is not that, it's mistakes. And one of the mistakes that I'm making, one of the most common mistakes, is curve fitting. Trying to curve fit the strategy to a market that's not appropriate. Okay, so find out, get the ideal setup for your strategy. What does that look like? And then start create a couple of indicators for you to identify what are those indicators that need to be in place for you to even consider placing that strategy on that chart. Okay, very important. Eliminate the mistakes, and I promise you 90% of your months will be green months. Okay, it might not be the target you want. It might not be, if your target is 10 or 12%, it might not be that. But hey, if it's 2, 3, 4%, geez, that's more than you're going to get anywhere else. It's more than you're going to get in the bank. It's more. That's really, really good returns. And when you start getting that slowly, like the 2, the 3, 4%, you start getting that. It's just a simple matter of ramping it then. Okay, that's all it is. So eliminate the mistakes. And as I said, so many times the mistakes come in when you're trying to curve fit your strategy. I've seen it too often. Stop curve fitting. Start getting very clear about what is trending, what's ranging. If you've got a trending strategy, have some indicators to identify for yourself what is trending. Equally important is to identify when there is what are the indicators for you to show that it could be the end of a trend. We had it this week. I think it was Kiwi Swiss. Monday, Kiwi Swiss. Kiwi's been lovely trend, lovely trend, and technically it looked like it was continuing its trend, but there was something in it that was slowing down, and sure enough later on that day it did slow down. What are the indicators to you to show that trend is slowing down? Join me on Friday because I'm dealing with something very important. I'm going to use Kiwi Swiss as an example for what happened this week. I'm going to use Kiwi Swiss as an example of what I'm talking about for Friday Freedom, which is a very, very important. I think this will be the last live I do for 2019 before we head into 2020, and it's going to be very important, and I want you to join, pay attention to what I say, and consider it to make sure that you engage and do that. What I'm going to teach you on Friday for 2020, it'll make a massive difference. The topic is going to be coherence, using coherence in your trading, and I promise you it's going to make a massive difference. I'm going to use Kiwi Swiss as an example. All right, so catch you Friday. Take care. Bye-bye.